You know, every once in a while I get somebody asking me, and by the way, our team's researched this too, is that a lot of you are wondering, how do I make an extra $2,000 a month? Like, what's possible? I think that's a great question, because what could $2,000 a month do for you right now? What things could you be doing with another $2,000 a month coming in that you couldn't do otherwise? How could you actually get that to work for you? And what kind of options does it open up? Does it allow you to take that vacation you've always dreamed of that you could finally take? Could you take some time off work? Maybe even just go part-time in your own job. That's the kind of thing I want to address today. How do we actually legitimately create $2,000 a month? I've got a few ideas for you, so check this out. And by the way, the last one is my favorite. All right, so number one, you can actually lend your money. Now, when I talk about investments, I don't like to talk about mutual funds, because the truth is, if you want $2,000 a month or $24,000 a year, you got to save up at least $750,000 in the stock market to finally live on $2,000 a month. That, to me, not ideal. That's kind of sucky. And by the way, that's before you pay taxes. So really, you better save up $1 million so you can live on $2,000 a month. Does that sound awesome to you? Didn't think so. So if you don't have $1 million just lying around, lending can be another option. Lending, in this case, like when you lend for real estate, I like to do real estate backed investments. You can lend for all kinds of things, but I like to do more for real estate where there's something I can take claim in case they don't pay me back. I want you to think about this. If you're ever thinking about investing, think like the bank. What do banks do? First off, will they lend money for you to put in the stock market? The answer is no, they won't. In fact, how do I know? Because I was a financial advisor, and when you would buy a mutual fund from me, I would actually have you sign in a waiver saying, I did not borrow money to put in this mutual fund. Why? Because in the Great Depression, a lot of people did put money in the stock market from borrowing from banks. And when the stock market crashed in the Great Depression, guess what happened to all that bank's money? Gone. And it didn't help either that people were running in on the bank trying to get more money out. So banks said, no more, we're not investing, we're not going to lend you money to go put money into the stock market and gamble it there. That's why they won't give it to you for that. They won't give it to money for Bitcoin. Despite however much you might love it, they don't trust it. So look at what they do invest in. What will banks lend you money for? One, they will lend you money for a business, won't they? At least if you have a good business plan to go with it and you have some sort of track record or proof, they will lend you money for business. So if you're going to borrow money, yeah, business is a good one. The second one, real estate. If you've ever bought a house, you got a mortgage, they said, great, where's the house? Does it have the value? Great. Are you putting a down payment on it? Even better. And therefore, they lend you the money. Well, you can lend money in real estate like the bank does too. And you could even require that they have a certain amount of equity in that property. So for example, I have one friend that he'll ask for money from people for the 6 to 9 months. He'll borrow money for 6 to 9 months. He'll pay you 11% a year on that money. Now, when he's doing that, he'll tell you very clearly, he's like, okay, here's how much money I need. He might say, I need $200,000, but the property, after I complete it, is going to be $300,000. So there's that $100,000 of equity. So he'll tell you, he's like, listen, like after I do all the repairs, with all the repairs and buying the property, I need $200,000. After I'm done, it'll be worth $300,000 that I'll then sell. Now, why do you want it to be worth a lot more? Because I want it to be worth usually about that those kind of odds, right? I want at least 25%, 30% equity in a deal. Why? Because what if it doesn't sell for $300,000? What if it only sells for $250,000? Well, good, because my $200,000 is still protected. He will still get $50,000. I'll definitely get my $200,000. The other thing is this too, when you lend money, you're the first person that gets paid, even over the investor. Because just like if you have your own property, your own house, when you sell your house, guess who gets paid first before you do? The bank, the mortgage company gets paid first, don't they? And then whatever's left over, you get paid too. In fact, if you have a second mortgage, that gets paid off before you ever get paid. Owners get paid after lenders. So if you're a lender, you get paid first. So again, when I like to lend my money, I like to know that one, it's with somebody who is reputable, that's got a lot of experience in that space, and then two, there's a good amount of equity. But I can lend my money to them. So if I want to make $2,000 a month or $24,000 a year, and let's just say that they're going to pay me 10%, I really only need about $250,000, like $240,000 to make me $2,000 a month. But if they're going to pay me 12% or 1% a month, I only need $200,000. So you can actually make money with less. I ran into this with a situation with a woman in Arizona. She was a health coach. And she was saying, okay, Chris, like I have a goal, like I'm in my 50s right now, but I'd like to be able to get to the point of I need to retire. I said, cool, well, what's your retirement goal? $2,000 a month. I'm like, that's it? She's like, yeah, I'm single, I have a very simple lifestyle, I just want $2,000 a month. And she's like, honestly, my ideal day is I would just do health coaching for the first couple hours in the morning, then have the rest of the day to play and do whatever I want. I said, cool, well, how much money do you have? She said, well, not a lot. My financial advisor keeps telling me I just need to save a lot more. Okay, well, how much? I have $250,000. I have $250,000. I start laughing. I said, okay. And I was just going along with it. Like, well, how many years would you want to be able to get this point of retirement of $2,000 a month? She said, 10 years would be great. And I said, well, what if I told you can do it in 1 year? And she's like, okay, I think you're lying. That sounds too good to be true. I said, maybe, but it's really just math. I said, look at it this way. You have $250,000. Now you've been taught by your financial advisor you can only pull out 3%, so that's $7,500 a year. So yeah, $7,500 a year, that's like $600 a month. You got to keep saving. You got to almost triple your money. And that's if there's no inflation, which of course there will be. So you probably need to quadruple your money just to get there in 10 years. However, you have $250,000. Guess how much money you make if you only make 10% a year? Well, I would make $25,000 a year. Yep, that's about what? How much per month? $2,000 a month. You got it. You could actually do it with the money you have. And she's like, are you lying to me? Is that really possible? And the answer is yes. Like, is it guaranteed? No. But I'll tell you, I mean, I've got a lot of clients that are making at least that much in what they're doing, not to mention myself, right? So I'm like, there's no guarantees, of course. Like, anything can go wrong, anything can happen, but yeah, it's definitely possible. And a lot sooner than 10 years, that's for sure. If you want to be safe, you can do it in 2 years. How about that? I'll be conservative, 3 years. So that's a cool thing, guys. Like, you can really create a lot more with that money. You could also do things like rental real estate, right? If you want to make $2,000 a month, it doesn't take much there either. For example, I bought a property in North Carolina about 4 years ago, and that property, I put just really $25,000 down. It was not very much at all. That was with closing costs and everything. $25,000 down, and it was making me roughly about $250 a month. Now, it's a little bit different. Now I'm actually earning about $450 a month after just 4 years. So now my income is about almost doubled from what it used to be, but $450 a month. And do the math, $450 a month, right? I mean, if you wanted to get to $2,000 a month, you just need 5 of those. And think about that. That's actually half of what I told her that she could be investing if you're willing to wait a few more years. And so if you have 4 of those properties, again, results may vary. There's all kinds of variability, right? There's no guarantees, all that kind of stuff. All these disclaimers you need to have legally here. But again, just doing the math, right? Again, if you had $450 a month times 5, you're making $2,250 a month with those 5 properties. Again, I did $25,000 down. That's $125,000 that over time could eventually lead to over $2,000 a month. Now, as promised, here's my favorite, right? Because $2,000 a month is great, but could you do it with maybe little to no money out of pocket? Because maybe you're in that position, you're like, I just need $2,000 a month, but I really don't have enough money. Now, I'll be upfront with you on this. It's much easier to make passive income when you have money. If you don't have money, it usually requires time or energy. But one that many people don't realize is that it's not just that human labor or capital you have to offer, right? That time and energy. It could be relationships. So one thing that was a kind of surprise to me, so as I was starting to invest in real estate and so forth, accidentally, I discovered that referral relationships can be amazing. Because I was a mortgage broker. I was someone that actually could help people do mortgages, but I really hated the paperwork process. I hated the underwriting process. I hated the fact that I tell people in 3 weeks we should be able to close, and what happens? Next day they say, are we closing yet? And I'm like, dude, don't call me at 2 a.m. just to ask the next day when I told you not to. So it drove me nuts. And I remember telling that to a friend, and he said, well, why don't you get somebody else to do that? In a scarcity world where you think like you can't share money, that was never even in my mind. But in an abundant world, I thought, well, yeah, I guess that could be possible, but who would like to do paperwork? Well, lo and behold, I found a guy in my office named Clark. Because you have the name Clark, you gotta be a nerd, and you gotta love paperwork. So Clark did that. I said, Clark, if I handed people over to you, you didn't have to sell them. You just had to do the mortgage for them, basically do all the legwork. Will you pay me 50% on this? Because I was licensed as a mortgage broker. He said, yes. I said, great, this is awesome. And so he did. And about a month or so later, after I sent him one of my friends or family members, I would get a check for like $1,000 or $2,000. And I thought, this is great. It was like the easy button for Staples. Like, that was easy. It was kind of like that. It was kind of fun. And I was like, well, what else can I do? And so I remember there's a wholesale jeweler in Salt Lake. I started referring to them. I was like, hey, do you have a referral program? Because I send you a lot of business anyways, because I have a lot of friends in my 20s that are getting engaged or married. They said, yeah, we'll pay you a 5% kickback. So I would just give them their card, say, hey, if you go to this wholesale jeweler, you'll pay maybe a third of the price versus what you pay this other jeweler, but you get a much better ring for your money. So they go to them, they would save money with that jeweler. They were happy, the jeweler was happy, and guess what? I got a check in the mail and I would be happy. And then I even had a few other companies and businesses that I would refer to as well. And just, I was making a couple $1,000s a month, usually about $2,000 to $3,000 a month, just from being a connector, just from using those relationships. Again, I mean, it's one of those things that I never intended to have happen, but it was sure awesome. Because you know what that did? That just gave me more money to then turn around and invest and create more passive income. And that's why I was 28 years old when I was able to retire, because I had money coming in from all kinds of sources to kind of keep using and building that money until I create this income snowball. And so that's a great way to do it. Oh, and I'll just give you another bonus tip. If you have house equity, you might be able to do something with that to make more money too. Because that's what I did in that time to be able to bridge the gap and get myself retired when I was 28 years old. So I could go on and on about this, obviously, but I want you to just walk away with this, is that yes, you can apply labor and make an extra $2,000 a month and work your tail off. Or if you don't have money, can you leverage relationships? You can use money, or you can use time and energy relationships to be able to make that $2,000 a month. But I'll tell you, it's much easier than you might think it is. Hey, if you like this, go ahead and hit subscribe. We got plenty of other videos and education to offer you to help you on your journey towards that financial freedom. Click subscribe right now.